Yeah, we're rolling through the middle of the trading day on Wall Street, and the market narrative is tightening around one big theme: AI euphoria on one side, and AI anxiety on the other. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to keep clarity through the chaos in this noontime update. Since the last hour, the action has really sharpened around a handful of names and stories. On the upside, Tesla is back in the spotlight. According to reporting from MarkWatch's William Gavin, Tesla shares are flirting with new highs after a bold prediction that the company could one day reach a $3 trillion valuation. The stock has already cooled a bit from its early pop, but optimism is building around its AI and autonomous driving efforts. That kind of lofty target is exactly the sort of thing that can pull momentum traders in, even as longer-term investors debate whether those expectations are realistic. At the same time, AI is putting pressure on some of the more traditional tech players. Christine G. at MarketWatch points out that once reliable names like FactSet and Gartner are among the S&P 500's worst performers this year, as AI darlings soak up attention and capital. The question that's emerging now: are investors underestimating the ability of these old guard data and research businesses to adapt? Some on the street see resilient, sticky models that may not be flashy, but can evolve with AI rather than be destroyed by it. And then you've got a very different AI story over at Oracle, which I'd file as a key setup to watch rather than a resolved trade. Christine G. also reports that Oracle's stock and even its bonds can't quite shake off investor worries about how it's financing its big AI spending plans. The company has apparently left the market with more questions than answers on that front. When you see both equity and credit investors hesitating, that's a sign professionals are scrutinizing balance sheet risk and capital allocation, not just headlines about AI partnerships. On the risk side of the ledger, Jamie Chisholm's piece on an eventual AI boost in 2026 is still echoing through desks. BCA Research is arguing that high valuations leave big tech vulnerable to a meaningful sell-off if growth doesn't keep pace with the hype. Even if that's a longer-dated call, it can influence how portfolio managers think about position sizing and profit-taking into year-end, especially in a tape where a few mega-cap names still dominate index performance. Stepping out to the macro backdrop, there's a fascinating contrast between what the Fed is doing and how households are feeling it. Quentin Futrell highlights a family asking, after the Fed cut rates, "Should my son buy a $600,000 house?" The quote that jumps out is, "We all have economic jitters. Even with lower rates, they're seeing friends lose jobs and sensing shifts in corporate agendas." That captures the mood right now. Policy is easing at the margin, but confidence is fragile. For markets, that tension shows up in housing-related plays, regional banks, and consumer-sensitive sectors that trade off expectations for both rates and job security. And don't forget, as Isabel Wang has been flagging, we're still staring at a delayed November jobs report and a key inflation reading in the very near term. Those data points, layered on top of thin holiday liquidity and year-end positioning, are why strategists keep warning about potential wild swings into the final trading days of the year. Options markets and rate-sensitive sectors are where pros are watching closest for early tells. In the background, a lot of the personal finance stories trending right now: inheritance disputes, questions about retirement timing, worries about vulnerability even with a paid-off mortgage, underscore how macro jitters filter down to individual decisions. They don't move the S&P in a single session, but they shape sentiment and risk appetite over time. Into the next hour, I'll be watching three things: whether Tesla can hold on to that AI-fueled optimism or gives more back, how Oracle trades as investors digest its spending plans, and whether this AI valuation debate starts to spill over into broader big tech weakness or stays confined to a handful of names. All of that sets us up for a busy run into the closing bell wrap later today. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.